first give you an update on what is going on the day after the MPC decided to tighten monetary policy by introducing a 50% cash reserve requirement on public sector deposit. It's something that seems to be rocking the markets as we see the NSE All Share Index down about 0.7% in early trade. The laggards include the likes of Okomo Oil. The banks have been hit: Zenith Bank, GT Bank, First Bank, and Diamond Bank also falling, while the gainers in early trade include Nigerian breweries, Corn Oil, MRS, Forte Oil, and Champion Brewery. So some of the petroleum marketing stocks doing well, but then of course the banks shares are tumbling in early trade, reflecting, like I mentioned, the investor decision, investor reaction to the 50% cash reserve requirement on public sector deposits announced by Nigeria's Monetary Policy Committee. To discuss the latest market news, I'm now joined by Abdul Garba, research analyst at Don Norrie Merrifield. Thank you so much, Abdul, for joining us. We have to, of course, start with the market's reaction to that MPC decision. Like I mentioned earlier, the banks seem to be hardest hit today. Can you just talk us through what you're seeing in early trade today?
Okay, early trades today, as of last observation, we've had huge volumes of shares being sold off from very large banks especially. And we've seen that alternate to the tier 2 banks also dropping down quite significantly in points, above 5% for the likes of Sterling Bank, for Sky Bank, probably connected or unconnected to the results.
Right. Of course, those results will be scrutinized a little more closely now that we're seeing the banks having to take that hit. That's what many people are calling it, 50% cash reserve requirement on all public sector deposits. What that means for the benefit of our viewers is that on every 2 naira that each bank receives from the public sector, they will have to deposit 1 naira with the central bank, and of course they do not get much from that deposit. Clearly they are unable to lend that money to other sectors of the economy. And of course the MPC made the point about many of the banks putting a lot of that money in treasury bills and other government securities. Your thoughts about how the market has reacted to this, Abdul? Do you think this is an overreaction, or do you think this is the right reaction, the fact that it's broadly negative for banks?
Well, for now, it's probably to be seen as a positive reaction. Not positive in the sense of it's very timely. We expect this to probably ebb in the next few days. And then you see some stocks actually taking their rightful positions. But there would be some overreaction for some certain stock levels.
All right, and so especially on with respect to non-banking stocks, are we seeing a reaction there as well? Because many people will argue that this is broadly negative for companies because we are anticipating an uptick in interest rates.
Okay, no, it's not running same for the rest of the stocks. It's not the same fate that bemoans the rest of the sectors and the stock exchange. As of now, what we had, as of last observation, we had on inspection for the cement sector, for instance, the overall trades for the day have been very low, had been low, less than 1 million units traded so far. Right. And even with that, no strong direction showing any sentiment.
But as the market digests this information, what, in your view, Abdul, are perhaps the more defensive stocks that we should be loading up on right now? Because we are anticipating, like you mentioned, some reaction over the next couple of trading sessions.
Yes. Well, so far, you also have the breweries, Nigerian breweries, Guinness. You have the cement producing sector. You have food and beverages. All of them seem to have, going by today's trading, we don't see that effect hitting them almost immediately. Maybe after factoring in the next line of results coming from announcements for the second half.
All right. So which stocks in this context do you like at this stage, or do you think this is a time where we just need to wait it out and see where the market settles before we begin to allocate to stocks again?
No, we do have a situation where the banks are likely to go lower, and we also have a situation where earnings are about to be released for the second half. So in the wave of earnings releases and adjustments, there's less to be, there's more in prospects for some of the sectors. And let me put this forward, on the petroleum marketing sector, we've seen some some stocks actually heading back to correcting to their.
All right. I seem to have lost you there. I think I've lost the audio too, Abdul Garba. But of course, he was talking about where the market is and perhaps the stocks that investors may begin to consider to load back into their portfolios, given what is going on with respect to the monetary policy and the impact on banks, particularly. I think we do have Abdul back on the line. And Abdul, I think you were trying to give us a sense of which stocks you think you like at this time.
Okay, I was trying to refer to the consumer sector, basically the brewers, the food and beverages, and then the petroleum marketing, which should see, yeah.
But a lot of people are calling the brewery stocks already overvalued. Do you think there could be, even though they're already richly priced, we could see a lot more allocation to those stocks simply because they're defensive at this time? A lot of people not sure the outcome of this Monetary Policy Committee decision and its impact on the bank. So perhaps a lot of people waiting it out and perhaps loading up on some brewery stocks and perhaps maybe some other consumer good companies.
Okay, what's going on for the breweries largely is that independence, so to speak. They're able to generate cash on their own. Of course, they have that transient need for working capital. Go back to the banks and take a short-term facility to basically fund their operations, but they are cash rich as evidenced by their balance sheets. So that decision shouldn't impact them that much, and they're able to access international lines quite independent of that.